Hello, students. First, all of you are doing very well. So today we had the AFM 24 paper. This is a review of the question paper that we had. On a initial, basis, when you look at the question paper, obviously I don't have the MCQ section, especially after the fiasco that happened with the FR paper. But nevertheless, I looked at the questions of non-MCQ questions, which is basically your part 2. And I must say the paper is super easy. There are no tough questions. There are no complicated questions. There may be one odd here and there, something small. But by and large, the questions are fairly simple. Okay. In fact, some of the questions are extremely simple. And please note, like it has been happening for last, I think, at least 5 or 6 attempts. Almost every question, except for one, almost every other question has come straight, either very, very similar or same, or one small number change here and there from our P590. So from P590, which is basically the compiler of all the questions that we have, which is solved in a logical, neat, clean manner, questions have come from that. So if you look at it, the first question is from Portfolio Management chapter. It is question number 29, page 200. And what is the question? Question is, current year, there is, there are some numbers. Next year, there are some numbers. You are required, to find out whether based on all of this, the investor is required to buy, hold, or sell the shares based on above information. So basically, you are supposed to value a share. You are supposed to value a share today. Market price is already given. And next year, there is some value. You are going to value the share based on next year's numbers. And using that, you are supposed to finally tell, or rather give answer, whether you are the investor is supposed to buy, hold, or sell shares. It is a very straight problem. There is nothing complex. It is from page 200, Portfolio Management, question number 29. The second question is a mutual funds question. This is a new question. There is a slight twist, but the twist is also nothing major. Typically, what we have seen in mutual fund questions, especially questions like this, is they give you the date of investment and ask you to find out the holding period or ask you to find out the effective yield. Here, they have not given the rate of investment. They have given the holding period and the yield, and they have given the closing NAV. So obviously, what will they want you to find out? Right? They will want you to find out the opening NAV because they've given the opening value of investment. This question slightly twisted, but I don't think it is anything complex, especially with the kind of questions that we have solved. So this is very similar to question number 10 and 11. Obviously, 10 and 11, there you have to find out either the holding days or the effective yield or closing NAV or something like that. Whereas in this question, all those are given. So you are supposed to find out the opening NAV. Okay. Very simple question. Nothing complex in this. Next. Explain the statement that the starting point of an organization is money and the ending point of an organization is also money. Explain the statement to clearly understand interface of strategic management financial policy. I told you multiple times, this is a very, very important question that can come in the exam. Okay. Now, one of the things that I've noticed, they've not given the marks, or at least the question paper that I have, marks are not given. So I'm presuming the, marks are not, either they're on the left side, right side, or somewhere else. But on the question paper that I have received, there are no marks. That is something that I noticed. I don't know what it means. People who have written probably can tell better. Then the next question is from straight. This is from security analysis. You have various trading on various trading days. What is the Nifty NSE closing value? And based on that, you are required to calculate EMA, exponential moving average. It is super simple process. There is nothing in this question. If you know the formula, you are through. This is, in fact, this is the first question in security analysis what you have solved. Very similar question. I think even the exponent value is 0.62, just that the Nifty values are different. Page number 69, question number 1, security analysis, P590. Please have a look. Then you have a question on expanding operations and issuance of GDR. You have to find out, estimated flotation cost is so and so. You are supposed to find out the number of GDRs and cost per GDR. This also straight question, nothing complex. Question number 3 and 4, page number 474, 475 from International Financial Management. Very, very, very similar questions. Nothing new in this. There is absolutely nothing new in this. Okay. Next, moving forward, you have, this is a new question. This is a new and interesting question. They have asked somebody is invested in a mutual fund scheme. The details of the scheme are as follows. Asset value at the beginning of the term. Month. So I am presuming that is net asset value because they have not given Whether it is AUM or something like that, it is not clear. But I am presuming it is net asset value. It will be 78 because it is not crores also, lakhs also. 78 is the NAV, opening NAV. Annualized return is 16%. 16% is annualized. So per month, it will be 16 into 1 by 12. Okay. So the return that you've got is 16 into 1 by 12, which is 7. You arrive at some number, whatever is the return. From that return, you've already distributed. There is a distribution during the period of income and capital gain. So some amount of money is actually gone out. So whatever the money of that is gone out, you are supposed to subtract it and then arrive at the closing NAV. You're supposed to arrive at the closing NAV. This is slightly new, but I don't think this is also fairly simple. And they've asked, comment briefly on month-end NAV. So what does month-end NAV comprise of and all of that? It's a fairly simple question, nothing new. This is one new question that has come up. Then next question is from international risk management, interest rate risk management. This is on cap. Cap also, they've given a lot of data here. And they've said that based on this, the person is entering to cap at 9%. Now, eventually, following are the interest rates that are, eventually that work out. And the premium is 0.8% to be paid at once on 1st October. So 0.8% of the loan. This is a how many years loan? Interest is to pay it in the month of October, central bank releases. So it's taken a floating rate loan on 1st April 23. It will be repaid on March 28. So 23, 24, 25, 26, 27. It's a 5-year loan. So on 5-year loan, typically the premium, right? Premium is 0.8%. It is paid only once on October 2023. So out of these 5 years, 5 years into 2 is 10 installments. For the 10 installments, they have not, is it an annual repayment or monthly, half-yearly repayment? It is annual, right? So they have given you 1, 2, 3, 4, 5 rates. So for the first rate, obviously nothing is valid. Whatever is relevant is only for the next 4 rates. It is, how many years? 31st March 28. Yeah. So it is, I presume it is a 5-year loan. They have not told the period. Probably it can be a 6-year loan also. Okay, because on 31st March, there is some rate, so that is applicable for the next year. So please be careful. It can be a 6-year loan also. Okay, it can be a 6-year loan, yes. And on that 6-year loan, you're paying 0.8%. So per year, you will actually calculate. And the actual rate of interest they have given for 5 years. So it's a 6-year loan for which the 5 times there'll be a interest payment, 5 times, 6 times there'll be interest payment, but the first interest payment is already decided on the day you borrow. So only balance 5 are relevant. Only for those 5, there'll be a cap, or on the cap, there'll be gain or loss or whatever. There will not be any loss. But basically, you'll the premium, whatever is paid. And the premium has to be, in my opinion, has to be paid for a 5-year period, because even though it's a 6-year loan, you have taken it after half year is done. So 0.8 into 5 is probably what works out. Then they are asked whether you have to compare interest rate collar, this with interest rate collar. So interest rate collar, where you have both a floor and a cap. How does the floor work? They have not obviously not given what are the floor rates, but you have to explain how does the floor work. The floor premium is an income, and you sell a floor and you get a premium. And if interest rates fall, then you have to compensate somebody. So your interest rate is fixed between the floor level and cap level. And please also note, I am presuming that 0.8 here is the premium that is paid once is per annum basis. It is not for the entire 6-year loan. Okay. So that is what I am presuming. You can obviously take an alternative assumption and probably work it out. It doesn't matter. You are required to show how settlement will be executed. Settlement is not much of an issue. You can figure it out. Then apart from support from government, there are quite a few reasons why India is a sustainable environment for startups. What are the other reasons? Technology, geographic dividend, focus. There were a bunch of things. And I specifically said in my revision class also that this is an important question that can come because it is a change in the syllabus. Okay. This is one. Then tokenization. Tokenization also I explained. That there was a separate video on securitization where I explained, they both have similarities. You create tokens, there is, you create liquidity for something that is not liquid. Then, it is a transferable. There are investors, there is payment. There are a bunch of these things that I actually explained, right? So it is a very, very simple thing, very, very similar thing. Then coming back, next question. This is question on options and futures. This is a very simple question. You have a both put and a call, and based on the put and call, you have paid, there's a company whose stock price may go up or go down. You are now supposed to figure out, determine, if the offer is successful, not successful, so on and so forth. This is a super simple problem. I'm not getting into this problem, but it's so simple. It is page number 317 and question number 2. Okay, options and futures derivatives part. Right. Then you have a question which is on M&A chapter. M&A chapter, page 617, question 36. This is also a super simple question. There are there are two people who are planning for, one is planning to acquire the other. There's a market price, there are shares. Then merger is expected to have gains. You are required to calculate the true cost of merger. True cost of merger. So that is what I explained, right? Then after that, then you have another question which is on portfolio management. In portfolio management, this is question number 147, question number 14, page number 187. The investor has decided to invest some money, and the desired returns of the companies along with the probabilities are as follows. So you've given the returns and their probabilities. You are required to calculate risk and return of investment in individual shares, compare the risk and return of these two shares with portfolio of these shares in equal proportion, and find out proportion of each of the shares to formulate a minimum risk portfolio. Okay, so this also we have actually discussed. This is question number 14, page 187, portfolio management chapter. Very, very similar, very, very simple. So actually, I'm finding this particular question paper to be super easy, boss. Then you have this on question number 5B. There's the dividend that is paid. Dividend is expected to grow. Then after that, T-bill rate is so much, variance is so much. You're required to calculate required rate of return, intrinsic value of the stock. This is also portfolio management, question 38, page 208. Very, very similar. They've just changed the numbers. Okay, they have just changed the numbers. Very, very similar. Then 6A, this is advanced capital budgeting. I told that there will be a question from this chapter because this is the first attempt when this chapter has been introduced. So you will have a question, and they have given a question on replacement cost, right? Future replacement, ignore so and so. And future replacement with ideal machine revenues and unaffected. Define the optimum replacement cycle, not replacement cost, my bad. Optimum replacement cycle. This is question number 38, page 63 of advanced capital budgeting decisions. This is also a question that I said could most likely come. So this is also a very simple question. There is nothing complex in this. Then B, equity shares of XYZ currently traded 34 per share in the market. They have so many number of shares. They wish to acquire somebody. There is another company which is likely to acquire because of synergies. Feels the management has been overpaid. So they are planning to do some savings and all of that. Additional information is given. You are required to calculate maximum price per share and calculate at which they will be willing to offer for their controlling interest. Okay, this slightly probably lengthy question. Not too lengthy, but slightly you might have to work your mind. This is question 56, page 653, M&A chapter. So this also we have done in the class. I've done all the questions in the class except for that one mutual fund question. I think some 3A or 3B, if I'm not wrong. Which is that there's a mutual fund question, right? 1, 2. Yeah, this one. C. This is 3C. So I think marks probably are given in somewhere in the side. The person who sent me the scan didn't give it. But anyway, other than this, every other question we have done. All right. So guys, this is a very, very easy paper according to me. People should score excellent marks. I don't know how the MCQ was. Probably you are the better judge of what MCQ is. You probably can, come give feedback on how the MCQs were, whether they were easy, whether they were tough, whether they were case-based, how deep were the cases, whether the free MCQs that we've given on our app, whether they've been useful. Please share your feedback on this particular video. I'll be more than happy to get back to you, give any changes that you suggest, any feedback that you have, anything that you have, please feel free to share. We'll be more than happy to assist. Okay. So now with this, I conclude this session. Please go, don't watch too much of all these videos. Go back, go home, study for the next upcoming paper, paper 3. If you're writing second group, if you're writing first group, paper 3, if you're if you're writing both the groups, then of course you have 4 more papers. If you're not writing both the groups, writing only one group, then next paper is your last paper. Give it your best shot. Okay. So with this, we'll wind up this session, and all the very best for your upcoming exams, and